welcome to Zee Commodity Capsule. Oil prices continue to remain volatile on Monday, remaining close to its recent peaks after US President Donald Trump issued a 48-hour ultimatum for Iran to open the Strait of Hormuz. Having said so, Brent crude June futures, which is now the most active contract on exchange, rose nearly 2% to trade above $109 a barrel, while WTI crude has risen past $100 a barrel. Now, focus remained on efforts by US and its allies to offset the supply disruptions stemming from Iran. Washington over the weekend issued a 30-day waiver on buying Iranian oil, which is already at sea. Having said so, over the weekend we saw the International Energy Agency head Fatih Birol observing that Iran oil crisis could worsen beyond the 1973 and 79 oil crisis. Meanwhile, Trump on Saturday evening said that Iran had 48 hours to open the Strait of Hormuz, or else US would obliterate the critical energy infrastructure in the country. Amidst all of this, we have seen that Goldman Sachs raised its 2026 average price forecast for Brent crude oil to $85 from its previous $77 forecast, while for WTI crude it raised its forecast by nearly $7 to now at $79 a barrel. Gold prices along with silver have fallen sharply on Monday, extending the declines from the previous trading sessions. Now, gold prices are hovering below $4,300 an ounce, trading very close to three and a half month lows, down nearly 15% so far this week, as in past 1 week, as concerns over inflation and high interest rates sapped the safe haven demand for bullion, even as US-Israel war on Iran raged on. Now we have seen that US President Donald Trump issuing of a 48-hour deadline for Iran to reopen the Strait of Hormuz pointed to a potential escalation in the conflict, especially as Tehran warned of retaliation. Meanwhile, we have seen market is pricing in for US Federal Reserve interest rate hike this year. It has shot up and is now seen as far more likely than a rate cut which was previously expected, as interest rate futures were pricing in another 27% chance of a rate hike by December, according to the CME Fed Watch tool. Silver prices have dropped below $63 an ounce on Monday, hovering close to its mid-December lows, extending its sell-off into fourth week as the ongoing Middle East conflict intensified the inflation fears. Copper prices slid over 3-month low, trading close to $11,700 a ton on London Metal Exchange, with fresh escalation in the Middle East war keeping the oil prices high after US and Iran traded threats. Helping copper meanwhile to reclaim some of its losses were the hopes for a recovery in demand from the top buyer China. China's stock sitting in warehouses registered with Shanghai Futures Exchange saw their first decline since December 12th, according to the inventory data which was published last Friday, down 5.5% week-on-week basis. Aluminium futures has fallen below $3,200 a ton, extending its retreat from a near 4-year high as traders assessed demand prospects amid the ongoing conflict in the Middle East. Demand from China still lags the previous year due to higher aluminium prices, even as the operating rates among the fabricators have picked up following the Lunar New Year holiday. Prices, let me remind you, had surged this month after the US-Israeli strikes on Iran led to shutdowns and shipping disruptions in the region, responsible for roughly 9% of the global supply of aluminium. Last but not the least, raw sugar prices globally have hit a fresh 5-month low. On ICE exchange, we saw it settling above 15.7 cents a pound, marking a weekly gain of 9.2%, which happens to be its highest since September 2024. Clearly, the strength which has come in sugar prices is due to US-Israeli war on Iran, which has kept the market on edge and pushed up the energy prices. Now, rising energy prices could prompt the cane mills in Brazil and in India to produce less sugar and more ethanol.